there it was, the most loneliest sound in the world, the sound of a spaceship taking off into outer space. When it went to the moon and beyond. We didn't get that today. No, we didn't. We're upset that we didn't get that today. It was crazy today. I'm not gonna lie. So, if you watched my video from earlier, talked about my invested interest in Solana, and talked about what could possibly happen with it. Also, I talked about what could possibly happen with Ethereum and what could possibly happen with Bitcoin. All coming from a smart money perspective. This is a smart money channel, hence the name of the channel. And if you're wondering what smart money is, it is basically trading with the institutions, right? So it's basically trading with the people who have all the money, who drive out the small guys who don't know how to trade, who read all the books that tell you how to trade, and basically everything in those books are written by the big guys who know how to trade, and so that you follow that so that you get screwed out of everything, if that makes sense. So basically, try to give you a rundown of why does this do this? YouTube is not. It says YouTube is not receiving enough video to maintain smooth streaming. Hold on, I'm gonna look at this because I changed my. I changed like everything to try to get as best stream as possible. Stream is not streaming the video to maintain smooth streaming such as user experience buffering. Stream health is excellent. Then it says no data. YouTube is not currently receiving data for this stream. 837. Hold on. 846 is an error. Okay, and so that's YouTube is not receiving enough video to maintain smooth streaming. As such, viewers will experience buffering. Buffering not bad. You know, I do have it on low latency. If you're experiencing, low quality stuff, let me know. That way I can fix it. Fix it the way it needs to be. Anyways, let's just go ahead and get to the charts. Because if you were with me this morning, then I was talking about, we talked about how huge of a day Solana had, and I have been in Solana since it was about $20, right? And so and I the other day, when I see it get up to like 40 something, I'm like, whoa, this is it had been up to 40 before, so I was like, okay, yeah, that's kind of cool. Maybe this is like what area it's gonna play around in. And then yesterday we see it like in the I think it was also the 40s and the 50s and the 60s, and next thing I know, last night it's in the 70s. I was like, what is going on here? So I did a video kind of late because I really wanted to try to get into what was going on with Solana, and if we could somehow. Hold, I'm going to turn the gain up on my mic a little bit because I think it's a little low. Hello, 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 hello. Hello, 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 hello. Hold on, I'm going to look at the back of this. Okay, sorry guys. There's the gain. All right, so whoa, that actually doesn't sound good at all. What I was talking about was Solana. All right, so I wanted to get down and see what what we could come up with to see if Solana was going to have a breakthrough moment, or if it was going to be, or if it was going to be the top, right? Because if it was going to be the top, then that was going to be like super boring. But okay, so I'm here at the chart now, and actually I want to go back to here. Okay, this is here meaning the OBS, the website, the streaming service, and I actually want to take myself off of here so that way you guys can see the charts. All right. Um, so we're gonna start. I want to start with a daily, to be honest, just so we can kind of see like what happened with Solana like recently. So as you can see, right around in here was like the $20 mark. This was probably when I was getting in back in April, yeah. And you can see it has a good run up, you know, and then it was probably about the same time as everybody else kind of fell. And it looks like it found support, came back, found support, and then hit the top of this. Okay, so what is this green box that I have here, right? That is probably what you're all wondering. I believe it's a weekly fair value gap. Yes, it is. Okay. So what fair value gaps are? You haven't heard me explain it. Is 3 candle succession, right? And if we have 1 candle, right? 2 candle, 3 candle, 1 and 3. If there's a gap left in between and in candle 2 by wicks or anything like that, mark that out into the future. Believe me, as you can see right now, you can tell that this already has a significant role in the algorithm. So again, I don't think I broke down smart money. We don't believe in trend lines or triangles or pivots or channels, indicators, things like that. We understand price action, right? In that there is an algorithm that is going to go toward a certain specific area of price action. And that area primarily consists of liquidity and balance, right? And by the way, and when I say liquidity, I mean price is going to try to find areas in the market where people have sell limits, buy limits. If it gets too low, sell them if it gets too high. Also, if they think there's an area to where it could break through, retest, and then continue on, then they would have, you know, I think some people call it market limits. MT4 calls it, you know, buy stops and sell stops. So I guess it just depends on what your broker really calls it, but basically if it goes from, you know, let's just say you're going from down to up, right? And you're at 10 and you need to get to 15 before you enter this trade, right? And your trade calls to go to 22 or something like that. Right, so then once you're at 15, once you're at 10, and then you get to 15. 15 triggers your entry, basically. So that is the kind of liquidity that we are looking for in smart money, because that is what the algorithm will be looking for. The algorithm doesn't, you know, there's no such thing as buying selling pressure. I hate to tell you, if there was such thing as buying selling pressure, we would have saw Solana fly up way today. Because I was watching on multiple platforms, I was watching the buy sell ratio, and the buys were out of control, right? And it just didn't buy. So if you actually think that there's buying and selling pressure, I'm sorry to tell you, it is just not accurate. But what is accurate? The algorithm that is in these charts. So, all right, so we are in the daily. As you can see, this is actually a daily order block as well. Sorry, weekly. It's the weekly order block from here to here, all the way across. Now, what do order blocks do? They act as magnets, and they also act as repellents. So once drawn into the magnetic area, or the weekly order block, or daily order block, whatever it is, then the more likely it is to repel. All right, so, but we had those way early on, right? So we're looking at all this, or at least I am, and I'm going, okay, the last couple of days have been absolutely insane. So especially last night, like even last night, what was it, like 8:30 or something like that, is when we had like another just all of a sudden pickup run, which right now it's 8:57 Central Time, so we could be having a run right now and I don't even know it. Let me look at the 5-minute and find out. Doesn't look like the type of run that we want, but it looks like the type of run that is healthy. That's for sure. So, all right. So I'm gonna go back to the daily. Right, and I can't remember how much of an extent I talked about the daily and stuff like that. But as you can see, you kind of have this almost like, yeah, it's kind of a wedge that forms, right? But as a smart money would see it, we would see a wedge there, but we wouldn't trade it as a wedge, right? As most people would trade it as a wedge. So the way most people would trade wedges or triangles or things of that nature is you're gonna pick, a random area kind of like that. Not a random area, but let's say the top, and then you pull your trend line down to where it's gonna hit the first top. So that would be this guy right here, and then we do the same thing for the other direction. As soon as I can find, there we go, the trend line. So, and this one's actually kind of cool. This one actually almost meets up. So let's just pick this guy, right? There you go. So you kind of have, like a crossroads here. So, what retail theory would tell you is that whichever side this breaks out of first, it would probably retest, one of these lines and then continue on. Smart money says that's ridiculous. Why would it retest an invisible line? There has to be a narrative behind something that is tradable, right? Oh, wow, that was really loud. Sorry about that, guys. There has to be a narrative behind something that is tradable, right? So, instead, what smart money does, instead of putting it into a triangle, right? Like I said, we find the weekly order block, we find the openings, right? So those openings would leave basically not a lot of trading within these areas. Right? So that's why they act as magnets, because somewhere within there, there's going to be a trade. Right? Probably lots of them. And you can find these in a lot of different areas of the of the chart. I mean, you can literally just go through and probably find them everywhere. Um, I'm actually gonna draw one out right now, just because I like the look of it. Right here, that little guy right there. All right, so I'm gonna grab it. I'm just gonna pull him this way. All right, and then I am going to name him. Where did the flags come from? I've been getting all these flags on my stuff lately, and I really don't know how they get there. We're going to call it FVGD, which means Fair Value Gap Daily. And inside, let's go with left. And actually, let's go with center. Left, you really can't see anything. All right, so whenever today, last night happened, right? Whenever I was making up a plan about what to do with Solana, because again, I have invested interest in Solana. I knew something was going to happen today, and it was going to be significant to an extent. Whenever I was looking at this, right? So I talk about fair value gaps. Right now, we're on a daily chart. Boom, you have your first daily fair value gap right here. So there's one, right? So draw a rectangle, and then continue on. See if you get another one. Boom, we have another fair value gap, which is actually this gold. I believe, oh, come on, I hit the wrong button. I always do that. I get excited and I hit the space bar. All right, so that should be that. That should be that square there. Actually, if I'm not mistaken, that'd probably like a 4-hour one. Which would make complete sense that I didn't put a daily on here. Wow. I didn't put daily on there. Okay, so what we're gonna copy this big guy here. Why? Because it's the same color. Oh, you know what? It is locked, so let's unlock it. Okay. All right. But I hate pulling them too far apart because then you can't write anything in them. All right, so I'm gonna double click this. We're gonna do the same thing. We're gonna name this guy. Why is it in small letters? I thought I had it in caps. Man, I swear this keyboard. I do have a nice keyboard though. I love this keyboard, but sometimes it bothers me the caps lock will it'll blink. It'll be like, oh, it's here, then it's off, and you won't realize it until it's too late. Okay, so right now we're kind of getting cluttered. I can kind of already see it, but that's what the smart money is. You got to learn to deal with the clutter. So we have two daily fair value gaps. Now, just to remind you, larger time frames trump smaller time frames, basically. Okay, so now we have one daily. Okay, so now the daily fair value gaps are gone, because now from here to here to here, there is no, gap that is going to be happening in between um, these candles. And, last night only this candle was here anyway. All right, let's dig in a little bit closer. How about that? 4 hours. All right, so from my mentor, to be safe, what you want to make sure is that you have whatever you're going to put out there as far as your I trade futures, so I'm thinking off the top of, well, of course I own these coins too, but I also played the futures on Solana today too. So I'm thinking, okay, to be safe, right, you want to make sure that your stop loss is at least two swings below the current high. And that was the current high last night at midnight, right? And a lot of people were probably already in bed. So, and for me, that wasn't the high yet, because I woke up at 3, because I almost couldn't sleep because I was excited about Solana. I really thought we were going to see an extremely positive day today. So this was swing 1, this was swing 2. So my stop loss was down here, right? So, but this is where I knew the action was going to be, was in this bearish candle, or sorry, not in bearish, this bullish candle that came out of nowhere. So, everything was going up, and then you have a down move, right? I say this in all my almost all my videos. Look for the down move before a very large up move, because that's going to give you a lot of clues about a lot of things. That's going to tell you where your order blocks are, right? That's going to tell you, especially if this very large candle breaks, the planes of the bearish candles, right, and closes above them, then that says that these candles, especially if they're in succession, are considered order blocks. So you can consider these order blocks. Now, what is an order block and why is it important? It's important because whenever price returns to an order block, it's expected to get rejected. Plain and simple. Sorry, I'm knocked something over. Plain and simple. It's expected to get rejected. Not only order blocks, but there's multiple different types of variations of these blocks as well. And they all kind of have the same outcome. So why is mine? I'm just gonna say, really, my mouse is frozen. Okay. So this pops up really high, right? I wake up, it's 3 o'clock in the morning, and I start making a video. And I had already had all of this made out prior to, because I did all this on my lunch break. I was like, all right, here's all the different swings. So in case it gets below, these certain areas, I'm going to bail. But what I thought was that whenever I saw this coming up, and then it come down, all right, so we have a 1 hour fair value gap, right, from here to here. I'm going all the way across. So my thing is that since we have a 1 hour fair value gap, I figured price would probably pull back into the fair value gap at some point. But what I thought, and what I was honestly expecting, I was expecting the I was expecting the price to rise like almost immediately, just because it had been so bullish so far that there was no reason for it to stop. But then again, it's smart money. People start talking, they start realizing, Solana has momentum. Smart money is going to put it into that. And now, who is smart money? Smart money is the top, you know, basically of all traders, 90% of the traders lose money. Or I shouldn't say 90% of the traders. It's a half and half game basically. Half of the money gets, you know, that gets traded gets lost. The other half gets won. Now, 90% of the people that trade that money lose it. 10% of the people that trade that money win it. Right? So what I'm teaching you, or what we've been learning, is what the 10% knows. Right? So if I pull this up here and I see this block right here, this is the most important thing of the day. Comes down inside the fair value gap and within here, right? And we'll get to this in just a second. Within here, these are 15-minute fair value gaps as well. So not only does it come down here and get rejected out and make a new high, right? So its high is 75.155. Right, now after it makes its high, it comes down and then it comes back up. And then once it starts to come back up, then we get a big drop. And as soon as we got that big drop, my heart was like, oh no. Oh no, this isn't good. And I don't think I talked about it in the video because I didn't want people to freak out, but I knew that we had created a mitigation block up in this area. If anything, Larry, let's start getting into the 15 minutes of these things. So whenever you have like something like this, like an M shape, whenever you have like an M shape, and the right side of it breaks down past the M, and with like no regard whatsoever, that causes what is called a well, it would be it's kind of weird. It depends on which side is higher, the left side or the right side, but of the M, of the middle of the M, and then what happens after that. So with this one, we have the left side higher than the right side of the M, so that would be a breaker. Why would it be called a breaker? Because a breaker creates basically liquidity up here. Otherwise, if it is lower and then this would have been higher, then it would have been considered basically a mitigation block. Why a mitigation block? Because it would have been an area that would have came to and been traded to later to mitigate losses from the people who were trading higher in this area, right? Because it would have fell through and then came back, and so they could mitigate their losses. So they could let go of those trades that they were buying up in here, and even up in here, to be honest. I mean, there probably could have been people that were buying way up in here, institutions too. Smart people buying way up in here. But knowing how the algorithm works, they knew that they could wait for if they didn't didn't get rid of it right away and they wanted to hold on to it and to see if it was going to get higher here and it didn't, then what you have to do is hopefully get out of the trade immediately. That way it doesn't become too much of a bother. But if you're not around and you're not there to see the trade and you see it get below here, then what's going to happen? Well, it's going to go inside the fair value gap, bounce up to the mitigation block, or sorry, the bullish order block, and trade downward, because here in this area right here is where a lot of people let go of any kind of trade that they had up in this area, because at that point they knew it was no longer long, everything was short, right? So I was gone by the time any of this happened. I was at work at 6, so I think I stopped recording at 4:30, which was when the M was happening. So I couldn't explain this to anybody this morning, which kind of was annoying. So, but what I could say was that, hey, look, we made a new high. What could possibly happen is that, and I drew this out right here. This order block, and this is what I thought was going to happen, was that you have this down candle, so you have it's the only thing, it's basically the last down candle before the next up candle that closes above it, right? So that last down candle, the volume of that candle is going to be considered your order block. And your order block, again, is once it's traded to, it's expected to get rejected. Now, the thing with that is, you also have something similar on the opposite end. Except for, I think I may have drew this out a little bit differently. Yeah, I'm saying this is a breaker block 5 minutes. So now we're going to get into the 5 minute of things. But we're going to look at this M. So here, you still have your bearish candle going down, right? So you have a high, a low, and then a higher high, right? So that in itself is actually a breaker. That would be considered a breaker block. But in this context that's currently in, it's also a bullish order block. Not always the same, but they can be the same. So, makes a top, all right? So liquidity created right there. Quite a bit of liquidity, all right? So comes down, and what we see, all right, is drops to about right here, and then it trades sideways, and then boom, drops. So what is happening in here with the algorithm is that it is creating another breaker block, basically. So you have a higher high, a low, and then, well, actually this isn't a, yeah, this is, no, yeah, this breaker block, but it didn't get broken. So it would have became a mitigation block. Same kind of thing. Don't get the words, too heavy. Just understand that whenever there is a high, a low, and either a higher high or a lower low, that the last, right, in this case, since it went from high to low to high, the last candle that went low would be considered your block. Your block. This is going to be considered your block that you're going to be looking at for trades or to see what's happening with the other candles. Because now that this is considered the block, put a rectangle around it, and as you can see, there's a complete division. Once it gets traded down underneath to the next candle, pops back up into it, and then boom, rejected, and it doesn't get back into it. Comes back down, goes into the bullish order block, right? Not only does it come down into the bullish order block, gets about halfway in, a little bit more than halfway in. And once it gets about halfway in, you should see a positive reaction out of that. A very nice positive reaction within the first half of any kind of fair value gap that gets pushed into. So this comes into this fair value gap about halfway through, and as soon as it does, boom, we get this next candle. Right now, this next candle again is a more bullish candle, and overshadows, or you can even say engulfs the previous candle. So then this candle becomes an order block as well. And they're pretty much the same. I mean, if anything, this candle is already inside of this candle, so you can just leave it be if you want, because it's already there. Or if you want to, you can take the top of the volume of this candle, go sideways with it. All right. I'm just going to go right through everything. Make sure the coordinates are the same too. Okay, so now you have two order blocks in the same area. So we have this area come up. All right, now it breaks up into the breaker block, right? This is the block that I was talking about that was formed by this candle from the high, low, high. The last down candle creates a block, pushes up into the block, automatically gets rejected. Where does it get rejected to? The order blocks. It gets rejected to the order blocks. I mean, if we zoom in on this, boom, I mean, it barely makes it through to the second part of that order block. And to be honest, this close, I mean, 15-minute chart, yeah, this is where that order block was. So since it comes down in, hits the order block, gets rejected. Of course, what did I say about order blocks? Whenever, what is the expectation? Whenever it hits it, get rejected, comes back up in. Now this time, this thing has a lot of force. And why does it have a lot of force to come inside of this, this breaker block? I don't know. But what I do know is that generally, whenever they do break into a breaker block, once they get to the top or once they get to the other side of the block, that is when you start seeing the price go the opposite direction. You won't see, or what you'll see is that you'll see it drive straight through the breaker block. And then now the breaker block becomes support. And it'll come up and then come down and hit this, and then it'll start moving up that way. And honestly, that's what I thought was going to happen. That's really what I thought was going to happen. Because I thought Solana was just going to have a day that it was going to break that. And I thought it was going to get to $82 today. I really did. I really thought it was going to get to $82 today. But instead, it gets up to here, right? So now we're looking at equal highs with these two candles. Right, so now it's kind of creating, false liquidity, I guess you could say. And so what do I mean by false liquidity? Not even, I wouldn't say false liquidity. It created liquidity. So now people are looking at these two highs that it just created, and they're seeing, okay, this is resistance, right? This is what retail traders see. Retail traders see this as resistance. So if they see this as resistance, and then the next candle starts and they see it start falling, what are they going to do? They're going to chase it. They're going to chase it, and they're going to start selling. What happened after that? Boom, turned around and bought. That is smart money. That is the algorithm of smart money. That is what the rich people do all the time to get away with taking your money. They know that if you see something like that, equal highs, and it starts to fall, they know you're going to chase it. Don't chase it. Don't chase it. Please don't chase it. So it gets up to the top of the breaker block, and then of course just free falls down through the block and down to the order blocks that we have down here. Again, what did I say about what happens whenever you reach order blocks? They're expected to be rejected. So they got rejected. And they are rejected right up into their breaker block. At this point, we have already created the order block, came outside the order block, came in, got rejected, and then filled the order block with price, and then exited. So at this point, in my opinion, you really don't need that breaker block anymore. It's done. Its use is now over. All right, so now what happens? Well, now we get the drop into an order block. But the order block's already been hit. So it does get rejected, but it doesn't get rejected for long. Order blocks can only hold up so long. Right? So instead, it just drops. Because like I said, whenever we get to the top here and we started falling, that was when I knew it was a bearish day. Whenever we couldn't come up and clear this liquidity right here, I knew it was going to be a bearish day. So, and now at the time, especially whenever this is happening, I'm looking over here and I'm thinking, okay, where is it going to go next? Where is it going to go next? And I kind of had a pretty good idea. One I even drew right here. It's going to go for the sell side liquidity. All right, so this little wick here, right? and click on that, you can pull that line all the way across. And people are going to think of that as support. Why are they going to think of it as support? Well, there's two candles right next to each other that are almost at the same level. So they're going to expect another candle to come down to it, hit it, and then move up. And then they're going to see that as the hope, because they're going to think of this as the support. Right? That's the smart money way. The smart money is there to trick you. So, as it hits this and people see a double bottom, possibly, now they start buying. They start buying and they say, good, okay, great. We have a double bottom. This is a very bullish chart. We're going to keep going. However, what people don't realize is, especially when it comes to these fair value gaps with these order blocks, things like that, these stay in the algorithm for a very long time. The price points do, the openings, the exits, the tops, the bottoms, side, the algorithm remembers the price points. The algorithm won't remember a triangle if you try to give it a triangle shaped, chip or something like that. But it will remember, hey, I've been to this price point before. I got rejected. I'm here now. I think I'm going to get rejected. And that's exactly what happened. So here we have this again, bearish order block. Now, a bearish order block, mind you, is it's a full block. It's the full candle. So even though the block starts here, and even though I've talked about these previous ones up here, now we have more, right? So here's one right here. We have this one right here, this one right in the middle. The last down candle before a big up move that closes up and outside of that candle. Right? And then, so because of that, draw a line straight across. Whenever a price decides to enter into that area, what's it going to do? Boom, get rejected. It is expected to get rejected. Exactly what happens. It's exactly what happens. Boom, expect to get rejected. Boom, well, this one just takes a little bit deeper into the area. But then once it gets deeper into the area, boom, expect to get rejected. So now we're over here. And of course, people start chasing it up this way, not realizing that this order block is still in play. Not really an order block in play as in being rejected, but at least this shape of it going all the way across can be rejected. That is still in play. So it comes up and now it hits the bottom, right? It hits the bottom of this bullish order block. And I put bullish order block inside of a fair value gap. That's what I put. Because right there is a fair value gap. I had it stretched out a little bit. But from this candle right here to this candle right here is a 5-minute fair value gap. So now, oh, come on. Okay. So of course you extend that out. So it comes up into this 5-minute fair value gap and also hits the bottom of the bearish order block. And as soon as it hits the bottom of the bearish order block, what do you think happens? Becomes bearish. Becomes extremely bearish. Now, if you're wondering what these different colors are, right? So again, we're in the 5-minute. I'm going to go back to the 15 to show you. Because the 15 plays a lot bigger role than the 5. The 5 can just kind of help guide you as to what can possibly happen next, because those candles form a lot faster. But your 15-minute candles are going to be 15 minutes and an hour are going to be a lot better as far as like putting in things like fair value gaps and such. So that's why we have this 15-minute here, is you do have this fair value gap. Boom, there it is. There's that wick right there. All the way to this wick here. 15-minute fair value gap all the way over. So now we have hit the bottom, right now at the top. We have hit the bottom of this bearish order block. And as soon as we do that, boom, it's just a free fall. Not only is it a free fall, it goes right through this 15, almost right through this 15-minute fair value gap. As soon as it gets to the bottom of the 15, and I told you guys to watch this. I remember making this up and saying, I don't think it's going to go through all of this. I said, but if it does, I said, watch what happens at each of every one of these levels. I said that this morning in my video. So now we're looking at it. We can see what happened at each and every one of these levels. So as it free falled and it came down to this 15-minute fair value gap, what happened? Boom, it stopped, turned around, came back up. Spiked through. Boom, turned around. Now, what is this yellow line here? Why do I have a yellow line here? That is the median of this 1 hour fair value gap. Because the medians usually play a very important role, especially in a bullish chart. But the thing is that it was starting to turn bearish. So I'm going back to the hour. I'm going to put a Fibonacci on this. Watch this. Hold on, where is the candle thing? Okay. It must have got moved. It did. Oh well, here, we'll move it back. Alright, it should have been right here. Either way, it doesn't matter. Because what happened is that I'm going to go back to the 15-minute, because you're going to see that as this came down and it hit this 15-minute fair value gap, came back up, right through another one. Again, we're starting to see the bearish chart form. Then it comes down and hits the halfway point of the hour fair value gap. What happens when it hits the halfway point of the fair value gap? Boom, gets rejected up. Now this is where the retail traders are going, yes, we're finally starting to see some good stuff. Why? Because they see these candles right here coming above these candles here, right? So they're excited. They're excited that it is finally going to start going up. What they didn't take into consideration, remember the bullish order blocks over here we talked about? A bullish order block here, a bullish order block there. The last down candle before big up move. How about the last big up candle before a down move? And that's what happened right here. Exactly what happened right there. And actually, I need to label that and probably style it as well. So let's make it red, right? Because it's bearish. Right. Negative order block on the 15-minute chart. So now, that's what people didn't see, or at least retail traders didn't see. I saw this. That's why I'm teaching it to you, because I'm a smart money trader. And I love teaching, and I want people to make money in this, right? And if you're not willing to try to put the effort into it, if you want somebody to hold your hand and just give you signals, go join a Telegram channel, you know. But if you really want to understand what's happening, you have to know what's happening in the charts. You have to know that the algorithm, what the algorithm is doing. You have to know these things, because if not, you are not going to survive. All right, so it comes back up and it hits this 15-minute. Oop, didn't mean to move that. I'm going to move that right there, and we're going to lock that. Okay. So this candle spikes all the way up, right? And this probably gives the retail traders a lot of hope. A lot of hope that it's going to come back. A lot of hope that we're going to see a bullish chart again. And man, I wish we would have seen a bullish chart at that point. Or I would have given anything to see, you know, something over in this side that I would have said, you know, save us from this you know, this chart. I wanted to see Solana hit $82 so bad today. So instead, you know, I mean these are considered bearish order blocks as well. I mean, the bottom of this would be considered a bearish order block. It doesn't line up to a top, but it doesn't have to. If it comes up and it comes close enough and it gets rejected by that area, that's bearish order block. So I could even show you here. Oh, come on. Oh man, I didn't know there was Brule too. Brule, are you still there, dude? I didn't realize somebody was actually chatting at me. Um, it says concurrent viewer 0. Crap, I don't think he's watching it here. But I learned if you go to there's a YouTube channel called Inner Circle Trader. Sorry, I was probably a little bit too close to the microphone for that. There's a YouTube channel called Inner Circle Trader, and that's where I learned all of my technical analysis. That guy is the man. Now he does everything on Forex. which would be the foreign exchange trading, you know, like euro and yen, um, or like, you know, the US dollar versus the British pound, things like that, currencies, you know, the currencies change. Now, what I realized after watching a lot of his videos is that crypto and forex are basically the same thing. But I mean, they're both they both have a base currency, and they both have a secondary currency. Um, the thing is that people think that crypto, just because it's blockchained, that it can't follow some kind of algorithm, and that is not true at all. These things follow algorithms to a T. If anything, they're more algorithmic than forex are. Um, and it's kind of scary. So, all right, I'm gonna get back to this thing popping up here, and then seeing this drop through here, right? All right, now we see this big drop through here, down to, again, these 15-minute. This one's 15-minute. This is a 15-minute fair value gap, right? And again, a fair value gap is in the absence of, you know, 3 consecutive candles. It would be the second candle. It would be the absence of any kind of wicks or anything like that in there. So here, I'll just go back here and show you. There you go. Actually, I probably should have pulled that one down and over here. All right, so there's one 15-minute fair value gap, another 15-minute fair value, right? And then the top one's 15-minute fair value gap. Now, as you see this drop, it comes down, and I already have a Fibonacci placed in here. Why? Because if I'm not mistaken, if I go back to the hour, the top of this was well, it looks like it should have been pulled over just a little bit more. Oh no, not that. I think that's locked. It is. So we're going to unlock it and pull this over here. Oh, shit. Okay, so here's what's going to happen. I'm going to move this back over, and then we're going to start a new Fibonacci. All right. Fibonacci, and boom. All right, now why am I starting it at the top of the red? That is a good question. It's just something I've been taught, to be 100% honest. It has something to do with, man, I wish I could explain it. I'm gonna sound really dumb right now, being like, hey, I'm the smart money expert. Whenever I can't explain why I put the Fibonacci on the top of the bearish candle. Oh, that's right, because it got traded down through. That's what it is. So it probably wouldn't be there if these candles right here, oops, didn't mean to move that. These candles right here would have stayed actually, you know what? Because I want to say this is actually it. I don't know why I have that at the top of there. I mean, if you think about it, it looks good. Because look at all these candles respecting that line. But it's also, that line is also the fair value gap as well. So, you know what I'm going to do? I'm going to put it down here. So what happened with Solana is that after it got dropped down here, and I'm going to put this in the 5 minutes because this is when things really started getting crazy. Because whenever, oh yeah, that's what it was. Okay, so whenever I did have this here, because whenever I drew the halfway point of the fair value gap, and I noticed it was extremely close to the 61%, I thought to myself, as soon as it gets to that 61%, I'm gonna buy. And then that is when pretty much everything is gonna turn bullish after that. Why? Because it gets down into the discount. That is what smart money looks for. Smart money looks for discounted prices. Discounted prices, anything below 61.8%. However, what happened was that it got down to right here. And it didn't hit that 61% because it was right here. And I was like, what's going on? I was like, that should have been a direct hit right at the 61%. And then I would have bought and everything would have been good. I waited, and as long as I could, I was like, okay, if it's not going to hit the 61%, then I'm just going to buy as low as possible, close to the 61%, and then we're going to be good from there. So I bought it. It was somewhere in this candle. It was like $67. So actually, I bought it on Gate.io. So the price difference was actually like a dollar or two less or something like that. So it was actually like 69, something like that. And so I thought it was over. I thought the day was over. The morning rush, was over. It was coming toward the end of the British session. I thought we were going to start slowing down at that point, and then again, like I said, it shot up right through there, that bearish order block, and then just took it down. And then as soon as it took it down and got below there, my heart sunk. I was like, crap. I was like, I made the worst move ever, and I didn't even realize it. Why? Because I didn't wait for it to get below the 61.8. I did not let it make that confirmation. Yes, it did cross the 50% line of the 1 hour fair value gap. Yes, it did that. That doesn't necessarily mean that it's going to turn around and be bullish. It can. Generally, if it does that, it's a really quick strike, and then it'll turn around and be bullish. It'll be on its way, and you probably won't see it again for another couple hours or something like that. But instead, this one decided to hang around for a little bit, and then push down. And then push down to the very, very bottom of that 1 hour fair value gap. And then after I saw that, Move this over here. I saw this. And I am still in the 5-minute chart. 5-minute chart, you're seeing this fair value gap, this huge fair value gap in the 5-minute chart. And the first thing I did, again, threw a Fibonacci on it, drew out the middle of it. So there it is, median 5-minute fair value gap. I wanted to see what the reaction was going to be. So let's take a look. And it was, this thing came in. I mean, right here is probably also the halfway point here. Let's just make sure it is. I'm pretty sure it is, because as soon as this candle entered into the 15-minute fair value gap, generally the first thing it does is just goes halfway through. Look at that. It is on point halfway through, right? So then it gets rejected, hits the top of the 15-minute fair value gap, and then comes in and then fills in the rest. Fills in the rest, gets to the bottom, and then comes up. And now we have this 5-minute fair value gap. What does it do? Goes to the top of the 5-minute fair value gap, and then comes down, gets back into the 15-minute fair value gap, back up into the 5, down to the 15, up, fills up to the rest of the 5, or the 15, I mean, and then after that, this is what I didn't expect. This is what I was expecting everything to be within this 1 hour fair value gap. And then as soon as it dropped out of here, that's when I was like, oh no. I didn't know what to do. I didn't know what to do. Because at this point, I had thought that since this was going to be the purchase that was going to make it go long, and it wasn't, I had been scalping a lot of this, and not scalping for a lot either. I was just scalping. So what does it do? It comes all the way down, right, to the 4-hour fair value gap opening. And then after it comes to the opening, it just drives right down into it. Right down into it to the daily fair value gap. Remember the daily fair value gap that we just drew? It touches the top of it almost perfectly. Actually, it probably does touch it perfectly. Daily fair value gaps are like that. I actually want to see what this low is. Oops, I moved. 58 point. Oh no, 60.689. Is that what that low is? No, 58.822. 58.822. 58.822. Let's see what these coordinates are. 58.822. Wow. Exact on point. Anybody tells you that price is random, laugh at them. Price is not random. This is all in the algorithm. This is proven. And if any, this is why I don't get. I don't get how anybody can it, especially if they're a good smart money teacher, and they can explain things better, hopefully better than I can. I try to explain things the best of my ability. Right. But if people actually listen to a good smart money teacher, such as Inner Circle Trader, um, they can walk away with a skill set that can just blow people away because you're not subscribing to something that everybody else is doing. You're not following the herd. You're not being that crowd. Instead, what I will do half the time is I'll actually go on TradingView and I'll find some retail theory person's idea and I'll look at it. And the first thing I do is try to figure out where he went wrong, or why it's wrong, I should say. And then I'll usually figure it out because again, smart money is pretty much the exact opposite of retail theory. So now that this has come down and it shoved its way down through this 4-hour fair value gap, touched the top. I mean, touch the exact top of the daily. That is insane. All right, so now we are coming up back up here. All right, I'm gonna zoom out a little bit. Nope, didn't mean to do that. Okay. So what I'm gonna do is I'm gonna grab this this 5-minute fair value gap and I'm gonna pull it over. I mean, it's sitting right on top of a 62% line right now. That's what's crazy. All right, so even after it came down through and went through the 4-hour, it came right back up to where it was. And again, I mentioned bearish order blocks, the last up candle before the down move. That could be this guy, right? That could be this guy. Either or, they're both in the close vicinity. Did that once the price jumped up into this area, it wasn't that it made an equal high that made it, go down, because it wasn't an equal high at all. It was kind of, I mean, it was close to an equal high, but it wasn't an equal high. I keep hitting the right click button. My bad, guys. My bad. All right, and make sure the coordinates are there. 1 second. Okay, so now we have possibly 1, 2 bearish order blocks. And actually, I don't think that that's what caused it to come down. I think it was, one, again, the 15-minute fair value gap, which is what I'm pulling over here, right? It gets to the top of that, fills in that gap, and then drops. And of course, the bearish order box probably played a little bit of in there. So then what does it do? It drops down. And now this is at the end of the day, basically. So now it's just noise, right? but it did again push out of here one last time down into the 4-hour fair value gap about halfway through, as noted. If you want me, I'll pull a fib really quick on that. Oh, come on. Yeah, look at that. I mean, that's probably okay. So what is the price of that 15-minute fair value gap? 59,875. See, I couldn't even believe it got down all the way down to 59 today. I did not expect it to get down to 60. So if we draw a line that is halfway through this 4-hour fair value gap, and it is 59,875 on both sides. Again, you can see that what we call consequent encroachment or median. You know, the median of the fair value gap. And once things come down to the median and get rejected, like that's what you would expect. You would expect something, especially on if it's a 1 hour, 15-minute, 5-minute, 4-hour. If it gets to the median in a really quick fashion, it's probably going to reject in a really quick fashion. All right, so I'm going to prepare for tomorrow right now. Because that is going to be a bullish order block. And if price gets down to that area, hopefully it goes up. And when I put plus OB, plus just means bullish. You might see me put, plus OB, minus OB, something like that. And then this Medellin, I guess the Medellin cartel is here. Sorry, guys. Median fair value gap. All right, so then after that, guess what? Boom, this thing took off and gets back to the same area of this 5-minute fair value gap. I just moved it. It gets to the same exact spot. So what I see right now is I see a lot of liquidity resting above here. I see this whole area right here as liquidity. Why? Because any kind of retail trader would see this and they would say, oh, once it's going to get up in this area, it's probably going to get rejected. You see all these guys over here? They all got rejected as soon as they got in that area. So, Once you get in there, you might as well sell. And then you know what's going to happen. One of these candles is going to take off through it. Guarantee you. Guarantee you. Just because that's what it does. That's what smart money does. Smart money gets you to believe one thing. They do one thing over and over and over again to get you to believe a specific thing. Like this. Like setting these somewhat equal highs, you know, in a specific area, right? That way, whenever it comes up to it and trades up to it again, everybody's going to be like, oh, don't worry about it. It's going to fall again. Throw in $500, you know, 500 leverage, whatever it is. And we'll watch it go down. We'll probably make about 20 grand or something like that. And then before you know it, you've lost 3 grand. And the next thing you know, you're losing 4 more. And you're going, how did I go wrong? And the answer is because you didn't think outside the box. You didn't think about smart money. You didn't think about the people who have deep pockets. What you thought about was a simple, stupid retail theory that they taught you. And you fell for it. And you're going to continue to fall for it until you learn. And the thing is, I really don't know if some of these people are ever going to learn. And actually, I hope they don't, because I need other people's money. So continue doing what you're doing in the retail side, and I will continue taking your money on the smart money side. That being said, I didn't have a great day today. Like I said, I was scalping a lot because I didn't expect the magnitude of what happened to Solana today. I honestly thought we were going to be going up first and then come down. Instead, we just came down. And not only did we come down, we came down hard. All right, so what I was going to show you is that what my mentor tells me a lot is that if you actually want to be a really good, successful trader, right, not only have your stop loss, I mean, of course, you have to have a stop loss. Don't ever go out there and trade without a stop loss. If you do, you're a fool. All right. Make sure your first swing, I guess you could say, the swing underneath. Let me try to find something I can draw with. Curve, here we go. That'll work. All right, so that would be your swing one, right? Especially if you're up at the top. I guess this could technically be your swing one, but to play it smart, this would be your swing one. So, and then your stop loss would be below swing 2, which I don't even know if that would be swing 2 or if this would be swing 2. I would personally put it here just because I don't know if this 4 hour, or is this the 1 hour? Is the fair value gap on a 1 hour? I don't know if this fair value gap on a 1 hour would come in and get swept and taken out. So I would possibly put my stop loss at the bottom of this guy here. Now, the thing is, if you can afford to trade that much, or lose that much in a trade, you shouldn't be trading. Well, not that you shouldn't be trading, but start off with a demo account or trade very little. You can open up an account through most places, put in $100, $200, something like that, and you know your bets can be 0.01, which is basically 10 cents, 10 cents a pip. Pip means percentage and point. I live in an area where there's a lot of meth heads, and whenever I say pip, their heads turn, and they think I have drugs for them, and I'm like, no, I trade, and a pip is a you know. So um, it's funny because I used to live in Chicago for 10 years, and this is my hometown. So when I come back down and I talk about this stuff, I talk about a pip. Everybody's head turns. It's so funny. Okay, I'm getting sidetracked, but again, successful trader, swing one, swing two would be where you would want to have your stop loss if you would want to stay alive in this trade and have enough money that it wouldn't liquidate you. And also, to make sure you don't get liquidated, small amounts first. Don't go all in, but especially if you're trading, uh, you know, margin. If you're doing futures, don't go all in at the very beginning. Feel it out. Feel out the trade. And unless you really think you feel confident about that trade and you really think that's what's going to happen, go with your gut feeling and do it. But if it's something you're questioning yourself and you're not really 100% sure if that's what you should be doing, don't do it. That's what I've learned through my experience in trading, because I've gotten burned so many times trying to chase these little stupid things. All right, so the question is, where are we at now? Where are we at now, Solana? All right, so we do have a positive order block here. I want to see if there's any kind of breaker blocks, mitigation blocks, things like that. Things that can save us, things that can push us toward the bullish side. I really think things are going to get bullish just because of what happened. And I mean, come on, Solana was like down here forever. I mean, I to be honest, I couldn't believe it was at 40 forever. Cause I think it was around, I don't know, maybe my birthday, Christmas time. I don't know exactly when it was. When Solana was about $20. But whenever it was, $20 was about the time that I bought it. Why did that move? Don't move. All right, I'm gonna lock it. So now, what is interesting is that this chart has just been kind of slowly but surely. I mean, it's been grandpaing along. Right? It is what I like to call it. He'll be coming around the mountain when he comes. Coming around the mountain. That's how I feel about this chart, or how I felt about it for a long time. It just felt like it was taking forever. but I love this project, so I just didn't want to get rid of it. And I'm glad I didn't, because I'm not one of those people that catches those awesome coins and whenever right before they take off, like like Filecoin did. Um, I'm trying to think of others, but I'm sure there's others, but I can't think of it right now because I'm so focused on um, sorry, Solana right now. So swing one, swing two. I really do believe this would be your stop loss. I think if we start getting into this fair value gap here, priced at around, well, you know what? Never mind. I take that back. We could probably get into that, and it probably wouldn't be that big of a deal. And you want to know why? I'm going to show you something. I'm going to show you something really, really, really interesting. All right, so we're gonna go. We're kind of go down the line here, and then I'm also gonna put it on the daily, right around the $45 mark of all of these. Is this same candle. Now, I'm gonna let you in on a little secret. Whenever you see a candle with a flat top like this, that means it's institutionalized. That means the algorithm has something to do with this. There's no wick on it. No wick on it whatsoever. Why is there no wick on a daily candle? So, this tells me that eventually we're going to see the price come back down to this. It's pretty much $45. Somewhere, pretty much $45. And then again, this is going to be your bullish order block. So I don't know why it's red. We should turn it the other way. We should turn it green. Okay. This thing says suggestion. The stream's current bit rate, 1227.68 kilobytes per second, is higher than recommended. Well. I did not know that. Thank you for telling me, YouTube. This has been the first time I've actually been able to stream in forever. So, thanks, I guess. Why don't you tell me that whenever I'm trying to stream and I can't stream? You idiot. God, sometimes I hate YouTube. But it's about the only place that we got besides Odyssey. And if you don't know what Odyssey is, I'll just shamelessly plug myself on Odyssey. And you should actually just check it out. Odyssey is another video hosting platform site. But it pays content creators in crypto. Right? Win-win situation. The thing is that if nobody watches your videos, you don't get crypto, and you actually kind of have to pay to put up your videos in crypto too. It's kind of like a weird circulation like type thing. So if I put up 50 videos and nobody watches them, well, let's just say 20 is the limit, right? 20 is the limit that they'll let you put up for free, and if nobody watches them, you don't get any credits. And let's say nobody watched them, well, then I don't get any credits. Then what I have to do, I have to go buy library credits from Odyssey to continue hosting my videos. So it's one of those things where you want to build a following, because you know, if you build a following on there, then you're gonna get paid just to have people watch your videos. I mean, and YouTube's kind of the same, but come on, YouTube makes it almost impossible for you to earn money on YouTube. What, you gotta get what is it, 4,000 fans and at 1,000 view, or is it? Oh, I think it's 1,000 fans and 4,000 views. That, man, that's tough. And unless you're like out there every night hustling, telling everybody about your channel, that's like almost impossible. I'm a hermit. I sit inside my room all day. And I do these chart things. So it's really hard for me to get out there and tell people about my channel. So screw you, YouTube. I'd rather be on Odyssey. I got into that ramble and I forgot that what I was doing, and I should have been putting up a positive OB sign. All right, so now we have a positive order block. So I know we had all that lipstick on that chart from the previous Solana. What happens when it starts falling? Right, and and this is why I want to tell people this, because I have a feeling this will happen. You know, I have a feeling eventually we're gonna make a new high. I have a feeling that high is gonna be about 82, and then after that we're probably gonna have some kind of slight decline, and then all of a sudden we're gonna have a very rapid decline, and that very rapid decline is gonna stop at about $45, and then it's gonna turn around and go the other way. But people are gonna start getting freaked out right around $50, I have a feeling, and they're gonna start selling. And as soon as they start selling, the smart money buys it all up at that 45, and the retail traders are mad that they sold, because they're you know, they were FOMOing on the sell end of things. Whenever basic, I mean, this is basic smart money right here. A bullish order block, right? If you can't tell me what a bullish order block is after this video, watch it again, because that is part of the foundation of all of this, of smart money, and the legacy of Inner Circle Trader, the person that pretty much invented this. And he invented it because he had 20 years experience inside of these institutions. He knows how they trade. He hides out because he knows that they're probably out to get him, because why would the rich people want the rabble to make money? It's like that type of thing. They don't want us to make money. If they knew, why do you think we're not taught about it in high school? Why do you think even in college we're barely even taught about it? They don't want us to make money. They don't want us to know the truth. And what we're trying to do right now is we're trying to bring you the truth. Sorry to get all preachy on you, but I just want people to make money. I really do. And I hope I'm providing a platform for them to at least start looking into it so they can do it. All right, so anyway, that was chart number 1. That was actually probably chart number 2. So that was FTX, right? Bybit has it too. Here it is. And we're going to do the same thing. We're going to turn it green. And we're gonna put some green text on it. Can't put my finger on it. All right, positive order block there. And where is it at? Right about $45. Hey, Fergun. Sorry, I really don't know how to say your name. Fergun. But yeah, I did see the manipulation in the market. It happens all the time, and that's why I teach. I teach you how to understand the manipulation in the market because it's always in the market. And so, but that's what smart money is. Smart money is basically teaching you how to trade with the bankers, with the institutions, with the people that have the deep pockets. Um, because if not, if we're all trading retail, we're all going to lose, right? Because trading is, like I said this earlier, trading is 50-50. 50% of people put up money. The other 50%, or actually I should say, of all the money that's out there, there is going to be 50% of the money that is going to be, I guess, lost, and 50% of the money is going to be gained, right? But 90% of the people are going to be losing that money, and only 10% of the people are going to be gaining that money. So we want to be on the 10% side. And that's what this is all about. That's what my channel is all about. It's teaching you how to make sure that you know where the manipulation is, and how to understand it better. If you look up the Inner Circle Traders website, or his YouTube, he talks about the power of three. And the power of three is it's right on the top of my tongue, and I can't think of it. Consolidation, right? Manipulation, expansion. And those are the three components of the market: consolidation, manipulation, and expansion. So yes, I did see manipulation. I always see manipulation. It's everywhere. It wouldn't be the market if it wasn't manipulation. But thank you for your question. If you have any more, please ask. And to anybody who might be watching this afterwards, and you didn't see the question, somebody asked me if I saw manipulation in the market. So there's that one, right? So let's go to KuCoin. Boom, there it is. Same thing. That same bearish candle is there. Flat top, right? If it's a flat top, that's manipulation, right? Because if there was this buying power, right? Why isn't there a wick? There's no wick. So there's no buying power. That is manipulation. I mean, and I went through so many of these, and I was just like, oh my god, it's like, wow, I can't believe how many of these are on here. It's just insane. And it kind of sucks for KuCoin, because they just started offering Solana. Actually, I didn't think they did. They offer Solana futures, but they didn't actually offer the Solana, because I use KuCoin. I'm a KuCoin person. KuCoin and Gate. Those are my two. I love Gate because it has so many coins. It has yield farming, all that stuff. I love KuCoin because the staking of it is amazing. Cannot go wrong with the staking of KuCoin. Um, and also, the futures. KuCoin's futures are, I think, far more superior than other people's futures. Or even just trading on margin. Like, but that's the thing, is that Gate won't let you trade on futures or margin because they said, it's a law in the United States. It's not, as long as it's five, as long as the margin is 5x, then it's not illegal. So that's where Gate made me mad. But Gate is also where I have my Solana. Here, I'm just gonna grab a random one. Boom, there it is. Solid top. Solid freaking top. So, and let's see where that price is. $44.7080. So right around $45. So again, I know that we saw the steady climb in the last couple days. We've seen this craziness out of Solana. I personally think Solana is going to be the next Filecoin. I really do. Solana is just a phenomenal project. But don't get freaked out. Please don't get freaked out if this thing starts falling back, because you're gonna have a bullish order block there to help, and it's gonna hit it. It's gonna bounce right off, and it's gonna start going the opposite direction. Guarantee you. So that being said, let's go back to the first chart. 5-minute, because I want to see where Solana is right now, and then we're going to move on. Okay, so Solana is actually still in the 1 hour fair value gap. This is amazing. I can't believe it's still here. So it's not going down right now. It's still staying within this 1 hour fair value gap. It is also kind of hanging out in this 5-minute fair value gap area too. So it doesn't look like it's causing much of a threat. I'm gonna get rid of this Fibonacci here really quick. But like I said, what it is doing is it's creating fake liquidity above, right? Everybody's gonna see this and they're gonna say, okay, that this chart has to go down because of all these tops that it's made, and these tops keep going, further and further down. So therefore, it, it should slide down in a retail theory person's perspective. That's what they would be thinking, right? In smart money theory, we look at this and we say, oh, there's a lot of liquidity up here. This is where price is going to go to attack. So we try to figure out a way to, we look for something in the chart that would be bullish, that would take off and go against that. And I personally think it's going to be right here. Oh, maybe. No. Yes. The only thing is I hate these M formations. I really do. I hate these M formations unless something like this happens to it. Because if it just drops straight through that, right, and then it comes back up to it, more than likely you're going to see it get cut right there and then drop again. Because that's that, that breaker block. So instead, what it's doing is it's hanging out like right inside of this 1 hour fair value gap. I think if I move that there. Actually, I have no idea what this Fibonacci is over here on the side. Oh, okay. I think. Oh, yeah. Okay, I see now. I don't think that's from that Fibonacci, though. It might be. It looks like we possibly connected two Fibonacci's. I don't know. But if this were the 100 and this were the 88.6, 79, 70.5, 61.8, 50, we have a gap into a 0. Oh, here's the 0 of that Fibonacci at about 76, almost $77. So I'm not for sure what this Fibonacci is doing here, so I'm just going to delete it too. But I will say that even though this has kind of kept up a good fight, right now what's happening is making me wonder. Because usually once a price is sitting at the bottom of a fair value gap for quite some time, that's when it wants to take off and go above it. Now, I'm trying to think if there's anything that would prevent it from doing it. And no, price is balanced. And what do I mean by balanced? I mean that wicks are touching each other. So instead of having a gap in between for a fair value gap, the wicks between each candle are actually coming up and touching each other. There might be like a tiny minuscule gap like right in here, but if it's so tiny, it's really not gonna. Hate to tell you, but it's not gonna. I mean, look at that. It's like the difference of like 20 cents or something. I don't know. But the thing is that here, again, you do have that drop down. Right here, you're coming to the bottom of that fair value gap. You come up. Now we're in the 5-minute fair value gap. Drops down really quick here. Pulls back up. Now we're back down at the bottom. This is just telling, I mean, I wouldn't be surprised in an hour if price is up here. Would not be surprised at all. So, anyways, that's enough Solana for me. Sorry if I've been talking about Solana way too much, but I just wanted to give everybody kind of an overview, about Jesus Christ, it's been 2 hours. I've been talking for this long. All right, I need to wrap this up. Ethereum. I was gonna try to talk through Ethereum, but man, there was a lot to talk about in Ethereum. There was so many fair value gaps, so many. There were some rejection blocks. There was, as you can see, the medium bullish candles. there's a mitigation block right here. Um, 4 hour fair value gap is where it ended today. Got to the bottom of that fair value gap. Poked through it, came back up, and it is now inside another 4 hour fair value gap. So, and again, with smart money, you cut through candles. All right, so it's not a supply and demand thing. It's not like a one and done thing. The algorithm remembers, and you can cut through candles. Okay, so I just wanted to point that out in case you're ever like, well, why is it doing this so many times? Well, it's because it's an algorithm, and if you know anything about algorithms, they can have a tendency to either repeat or do the same thing. But you're not gonna see the same exact repetition in these markets. You're not gonna see the same formation over and over again. You're gonna see something new every day. But what you learn as far as smart money is the best way of how to combat that. And you're going to say, you know what, I've seen that before. I've seen it in a different way, but I've seen that before, so I know what to do with it. And then you're going to come out victorious. And then you're going to throw your money in the air and go, woo, I'm a millionaire. No, I don't really know what you're going to do, but you're going to be thankful that you have learned that skill, you know? And the reason I am learning this skill and the reason I am so excited about it is because, to be honest, I'm 35 years old. Most of my 20s, I probably should have been, I had a good job throughout my 20s. I'm not gonna lie, but I didn't think about retirement. I just wanted to party, do this and do that. But now that I'm 35, I'm like, you know what? I want to retire as soon as possible. And so that's why I'm so focused on trading. Because I want to take every trade and make it into a positive trade. I don't want to lose. I don't want to lose. I'm gonna lose some. I already, it's impossible to win every trade. I know that. But I also want to mitigate my chances, which is why I didn't like Fat Boy Crypto, or Bit Boy Crypto, whatever you want to call him. He is the worst trader of all time. I can't stand watching him trade. He doesn't use a stop loss. He lets himself get liquidated all the time. Like, okay, great. Like, bring us all the crypto news that you want. I love that about him. Don't trade live online, dude. You do not know what you're doing. Leave that to the TA experts. Leave that to Tom Crown. Like, and I don't even like, Tom Crown's style is not my style. Tom Crown's complete, like, straight down the road a retail trader. But he's good at it, he is. He's actually a good retail trader. And there are good retail traders. And if retail works for you, that's great. I hope it works out. But I'm gonna choose smart money over retail trading at any time, because my first year of trading was all dumb money or retail trading, and I failed miserably, so miserably. And my last year has been nothing but pretty much smart money trading, and it has changed my life. Changed my life entirely. Like, I can finally see a future now. Like, I can finally, like, have a sigh of relief, because I know that even though I have a good job, I can always pull a second income. I can always have a trade going. I can, I can teach somebody. I can, do a video. I can do something about this. But anyways, Ethereum right now, again, down through the 4-hour fair value gap, inside another 4-hour fair value gap. Where's it going to go from here? What do you guys think? Is there anybody out there still? We actually had some watchers tonight. They could have hung around a little bit longer, I think, but I honestly thought I thought today was going to be a good day for Ethereum. I did. I had all this marked out, right? All this is going. And again, I woke up early this morning, 3 o'clock, to start a video, and I got done at 4:30. And I remember looking at my phone, and I got into a trade at 3 o'clock with Ethereum because I saw what it was doing, and it came down into this order block, or actually fair value gap, I should say. And so I think I put a trade, and it was somewhere right here. So it was somewhere in there. And held on to it. And I was so adamant that it was going to reach this red line. This order block from the 1 hour at 33.66 that I did not let go of the trade. And as you can see, how far it went against me. So I made a very, very bad move today. So I make dumb mistakes all the time. Not all the time, but I make dumb mistakes too. I'm not going to sit here and act like I'm the perfect trader. I want to be the perfect trader. Yes, that would be amazing. But to sit here and act like I'm the perfect trader, no. I'm not. Do I know enough to try to save somebody from, especially in this kind of economy, doesn't have a job? Can I help them try to get on their feet by teaching them how to trade? Yeah, I probably could. Or at least make enough money to, go to a fast food joint every day and get some food. That's what I would like to see, So, Ethereum. Man, I don't know how I botched this one. Because, this chart is just like way too perfect to botch. But I botched it. Look, you have a fair value gap around the hour here. It's probably right in there. And then look, pulls down, boom. What does it hit? Bullish order block. It couldn't be any more obvious what that is. That is a bullish order block right there if I ever saw one. Last down candle. And not really the last down candle, but, the candle with the beefiest body that is the last down candle before the up move that closes above it. And what does it do? After that, it comes down into it. Boom. Picks off. And you know what? I'm talking about stuff that's like 6 days ago. So let's just go to today. Instead of talking about the anomalies of what happened 6 days ago. So I put the trade in right here, right at 3 o'clock. I think what was the crappiest thing was that, okay, I work from 6 to 3, right? In between 8 and 8, well, 7:30 and 8:30 is like the worst time of day because there's nobody there from 6 to 3. There's me and like 5 other people. At 8 o'clock is when everybody else comes into work. So 7:30 to 8:30 is just like everybody talking, everybody doing this and everybody, and I feel like I'm being watched, and I don't, you know, technically I'm not supposed to have my phone out at work. I have a professional job, you know. Um, I don't want to have that professional job. I want to be a full-time trader, and I'm gonna get there. I will get there, but I just didn't have time to pay attention to see what was going on at that time, you know, at the time when it counted the most. Even though I wanted, you know, the price to be way up there, if I would have seen, I mean, look at this. Hold on. It's so simple. It's so simple. You got this big spike down, right? Okay, all the way across, right? And because you see this big red candle that goes down right through it, that tells you that this is a breaker. If you have something speeding down through something that you know that's already trying to knock somebody out, it tells you that this is a breaker. I mean that's common sense. So therefore, whenever it comes back up and reaches that breaker, it's going to go the opposite direction. But the funny thing was is that it got to it, and it got to that breaker. Look over here. It got to that breaker. How many times did it trade to it? 1, 2, 3, 4, 5, maybe 5, 6 times before it actually got into the breaker. And not only that, it got into the breaker, then it got to the top of the breaker, then the bottom of the breaker, then the top of the breaker, and then up into, I think this would have been another fair value gap, if I'm not mistaken. Yeah, 1 hour fair value gap. And during this whole, nope, didn't mean to move that. I'm gonna move that really quick, and I'm also going to lock it. And just things were just going crazy busy at work. I did not have time to watch this. And instead, I had time to watch it fall. Sucked. But to mitigate most of my losses, it was I jumped out of the trade right here. It was 10:30. I remember it was 10:30 when I jumped out of the trade. Just because I was like I had already missed everything. This thing is probably going to continue going bearish. Why would I even risk trying to hold on to this? And look at it. I'm glad I didn't, because I would be $300 underneath right now, probably. But the good thing is that it is coming up and out. Coming up and out. What I would like to see is that, okay, we see these equal highs, right? I don't know if you see them, but I see them. Whenever I see equal highs, I get excited. I'm like, oh, it's about to go down. And I'm trying to grab a trend line right now, but I can't find my mouse. There it is. Okay. That's what I'm talking about with there it is. Yep. With equal highs. I saw that high. I saw that high. I knew it was going to break through it. And it's going to continue to break through it. Watch. It's probably going to push. And then it's probably going to push either to the top of this or over it. And one thing I don't want to see come on, where are you at? Why is this mouse hard to find sometimes? That's what I don't want to see. I don't want to see it push through this and then hit this. And then stop and then turn around and go back. I mean, okay, so if it does hit this bearish order block right here, little wiki. It still has time to try to kind of draw back before it makes another run. So that's the good thing. But I think we're going to wake up tomorrow with Ethereum having quite a bit of a positive percentage. As you can see, even that 4-hour right there is fine. I want to check out the 4-hour. Okay, so that's the weekly fair value gap. So that's what this big gray box is. It's a weekly fair value gap. Rare to see those. But up here, look, you have 1, 2, 3 order blocks. And I think that's why I thought it was going to go higher today, because I honestly thought I was going to try to break through these fair value gaps. I mean, come on. I mean, Solana broke down through everything it shouldn't have. Should have went up first. It should have got that high and then broke down. And then we see Ethereum, and Ethereum had a good run, I'm not going to lie, but then it had a really bad breakdown. And I want to say Bitcoin did too. Let's see where we're at with Bitcoin. Actually, this is Bitcoin for futures. It's the same thing, but depending on what chart I'd like to, I usually use Coinbase because that has the biggest user base, so the prices are usually spot on, even if it's perpetual futures. It doesn't matter. I mean, the price is probably going to be pretty close to the same, and the formations are going to be pretty close to the same. Brokers don't differ, too drastically far. So I try to find a broker that's going to be almost like right on point. So I try to use Coinbase for most of my stuff. But if we take a look at this, All right. Look at this. We got equal highs right here. Welcome to my life. Right here. Just notes everywhere. Trying to figure out what the F is going on. Daily fair value gap. There's probably a, I don't know, kind of fair value gap. But I'm on a 4-hour right now, and I'm gonna try to figure this out really quick. Oh yeah, that's right. I thought it was gonna come back down in here and buy. So I put golden pocket long buy. Really thought it was gonna come back down to this area whenever I was measuring this earlier this month. Didn't. Instead, I just continued buying, and then we got those equal highs. And we have a weekly fair value gap right here that is staying above. And I have a full premium array and a full discount array in here as well, with a big imbalance. I don't like imbalances. Imbalances say to me, hey, come back. That's what imbalances say to me. But there's a bunch of sellers trapped up a bunch of sellers down there, didn't you? I don't know. I think Bitcoin would take a lot more time for me to look at and find out what is going on, just because I've been more obsessed with Ethereum and Solana lately than I have Bitcoin. And the reason I don't do a whole lot anymore with like the small coins is because I trade. Um, if if you're the type of person that likes to learn about all those, you want to go to coinmarketcap.com and check out all the different coins and where you can buy them and how you can buy them and build a portfolio for yourself. That's awesome. I encourage you to do that. I really do. That would be something I would extremely encourage everybody to do. I still have coins. But I would encourage everybody to trade as well. So not only build a portfolio, but because the portfolio is going to be their fallback, right? A portfolio is going to grow APY, right? It's there to grow an annual percent. It's passive income, as we like to call it. It's not there to make you money consistently, as if you were as a trader. So that's why I always try to get people into trading, because trading can be a full-time job if you want it to be, and if you want to work hard at it. So then not only trading can be a full-time job in what people have done, what I want to do is become technically asset managers for others who don't know how to trade, but just have the money, the capital for it. There are specific contracts that could be set up between these two people, and and basically you are the account manager. Um, and considering the money is not, federally insured, if you make a mistake and let's just say you lose $15,000 of somebody's money, you can't get sued for it. Granted, if you did lose $15,000 of somebody's money, I'm pretty sure he's gonna know some friends, and you're not gonna get a job again. So learn it right. Learn how to do the right kind of trading. So hit me up anytime you want. Hit me up on TradingView. Hit me up on Telegram at Tedzily for both of them. If you're gonna hit me up, don't say hey. Let me know what you're hitting me up about. Tell me something specific. Let me know if you heard something that that I said that caught on to you, or something like that. I know not a whole lot of people watch my videos, but I don't care. Eventually, some people are. Either it could be that one person, that I could change their life forever. And if it makes it, I mean, if it takes making a video a day to do it, or every other day to do it, to find that one person that needs their life changed, it's completely worth it for me. So, that being said, I wish you all good luck and good trading. Tomorrow is Wednesday, hump day. I'm not for sure what is going on tomorrow. I know a lot of you crypto people that follow me. I pretty much turned my channel into a crypto channel. I used to be like kind of an everything channel. But I am not anymore. I used to do forex and indices. And indices are, indices as in, CFDs and things like that. And but I just don't do it anymore. A lot of people know about the smart money system in Forex. Not many people have brought it to light. And actually, I don't know anybody that's brought it to light in crypto. So that is my purpose. I want to bring this algorithm into the spotlight of crypto on purpose. Like, just to show people, hey, check it out. This is real. Like, and this is how you can trade with the banks. Those people over there in Goldman Sachs, why they make so much money, because they trade like this. How do you think the guy makes 7 million a year? Because he knows how to trade, and he asked for the right amount of capital. He got it. And they trade. They split the capital with him. But if you are just buying coins, I mean, you probably have a decent retirement. Do you want to have an exciting and a thrilling job that you could travel, be places all the time, meeting new people, meeting new clients? Man, it would be so awesome. Anyways, I'm throwing on Forex Factory here really quick. I want to see if there's anything about FOMC tomorrow, actually. Yes, there is. Okay. I wonder what the meeting's about. Meeting, oh, FOMC meeting minutes. Because this could affect crypto tomorrow. I'm just gonna have that too. Alright, so it's gonna be a little bit later in the day, so we'll have to see what happens. Anyway, I'm gonna get off of here, guys. It has been interesting to say the least that I've actually been able to put together a live show for once. I can't tell you the last time that I put together a live show for you guys and just done one. But, hey, tell your friends about it if you think they would like it anyway. Most people are gonna like this. I'm sorry, I'm not like all like energetic and be like screaming and yelling like Weird Al, but like I think that would annoy people. I could have that kind of energy to teach people, but I don't know if they would like it. Kind of a weird guy, kind of a weird guy, but like I want to help people. I do want to help people. I don't want to scare people away. But if you did like the video, if you did find something interesting, if you did learn something, what I want you to do me a huge favor right now and click that like button, click that subscribe button. Please. Please click that like button and subscribe button. I'm begging you. Because that would be awesome. I'm very, very far away from being any kind of YouTube affiliate whatsoever. So, I mean, every little bit counts. So, you know what? You know what? If you just watched the end of this video just now, and you didn't watch anything before, click that like button, click that subscribe button. You don't have to watch me again. I don't care. It'd be nice if you did. So then I could teach you how to trade like a real person. But you know how life goes. But I'm gonna get off here, guys. I'm still in 4 active trades from earlier today that I did not get liquidated on. I did get liquidated on one. And it was Solana. Now I got liquidated on Solana future, right? Now my earnings are kept in gate, so that's a different story. And that being said, I gotta figure out what we're gonna be doing with this stuff because I'm hoping it goes up. I'm hoping it gets at least 82. Because if Solana doesn't, this is gonna be my money too. I don't know. But we'll figure it out. We'll figure it out together, guys. Anyway, have a good night. Happy trading and all that good stuff.